Hello guys, it's Max here from Daily Market Movements. Today it is the 7th of November, it's a Sunday. The markets are opening tonight, which means we are on the cusp of a brand new trading week. Very exciting stuff indeed. But just before I start today's video, I have an announcement to make. Daily Market Movements is going to be changing rather significantly in the upcoming weeks. We are completely renovating our whole business structure here at Daily Market Movements, and I'm very, very excited to announce what that is going to be. You would have just seen in the intro, I've advertised the Twitter and our Instagram page. Please go and follow them both. I'm going to be announcing very, very shortly as to what those changes are going to be. But we are completely changing our structure of how we send videos to our viewers. So if you are a fan of Daily Market Movements, then please do go and make sure you subscribe and follow us on our social media platforms. We should be announcing this news within the next couple of days, but it's going to be very exciting indeed. Let's start today's video with the gold markets. Now, as I just mentioned, it's the weekend. We have the markets that are about to open. And, last week we had some fantastic movements. We had lots of volatility in the markets, lots of choppiness, which is great because it offers fantastic money-making opportunities. And, there's no better place to look than the gold markets. Last week we had a very choppy week here in the gold markets. We went up, we went down, and then ultimately we finished the day on this very strong green candle. So we currently are trading up at 1816, which was the high of the week. I think it was a high dating all the way back to the start of September. So we had a very strong finish here for the gold markets. And I say this because, it did get a little bit scary for the bulls here for the gold markets. We broke below the 200-day EMA. We then tested the 50-day EMA. We broke below the 50-day EMA, and we did get that daily close just below the 23% fib level. So that indicated moves down towards 1750. But that's not what happened. The next day we bounced back rather significantly, and that's because we had the Fed minutes and interest rate decision, and we had the Fed come out and announce a tapering, the start of a tapering process where they will begin to taper $15 billion worth of financial assets starting next month. So we did see the gold markets react rather nicely to this because some investors were not worrying, but thinking, could this figure be more? So if it would have been more than 15 billion, because 15 billion was the amount expected, if it was more than 15 billion, we could have seen a significant move lower here in the gold markets. But I think, investors were quite satisfied and happy that it was 15 billion as they all expected. And the gold markets reacted very, very well indeed. The most important thing here for the gold markets is that we did get that daily close back above the 50, but more important, the 200-day EMA. So as I just mentioned, we are now trading up at 1816, and it's very likely that I think we will go trading towards 1830. 1830 is this B area for this ABC correction that we've been trading in for some time. We haven't broken below the C zone, and we haven't broken above the B zone. So as far as I'm concerned, we're still trading in between this zone, between the A, B, and C area. So if we can get a daily close above 1830, I think gold markets go straight towards 1890, and then eventually 1900. But on the flip side, if we break down and get a daily close below the 200-day EMA, then that could trigger a move back down towards 1750 and then eventually 1730. Don't forget, guys, my medium to long-term anticipation for the gold markets is a move lower, but that is a long-term move. Short-term, we could still easily trade up towards 1900 and even go and hit a brand new all-time high. But as history shows, like during the 2008 and 2009 financial crisis, gold had that lovely spike up, and then a year or two afterwards, we did see that move back towards the downside. But one thing that is looking very bearish long-term is that we are trading in this, this downtrend, this big downtrend. But this, on the flip side, could just be a bullish flag. And if we can break out towards the upside, that will have, that could cause a massive rally towards the upside. So, I do want to pay attention to both scenarios that could play out here. I'm trying to look at this market from both a bullish and a bearish perspective. So, the bullish is that we could be trading in a huge bull flag, and if we break out towards the top, that could trigger a move to at least 2000 and $71, which is the all-time high. But on the flip side, we could just be in a long-term downtrend, and it could just take us all the way down to 1500. But time will tell. I'm going to take it day by day, and I will keep you all updated, of course. But the RSI is looking healthy. We saw plenty of room towards the upside where we could run here for the gold markets. Moving over to the Nasdaq 100. Nasdaq 100, what a week it was. Look how many green candles in a row we've had. For those who know, I bought down there at the bottom of this uptrend that we've been trading in for over a year now. I closed that trade up at the all-time highs, and we have smashed through that previous all-time high, and we're now trading up at 16,350. So I'm going to go ahead and get rid of this. One thing that I would say, guys, is that we are looking incredibly overbought. RSI, we're all the way up at 80. I think this week we will see a pullback, or maybe just a simple consolidation where we trade sideways, and that allows the RSI to recover. But I would not be buying up at these high levels. I had many of my clients who messaged me on Thursday and Friday and said, Max, look at the Nasdaq 100, it's flying towards the upside. Should I buy? Should I buy? And the simple and easy answer was no. Do not buy up at these all-time highs, because if the RSI was to correct itself and go to, let's say, 60, that's a move down towards at least a 50-day EMA, which is over 1,000 points towards the downside. To what? To potentially risk maybe another 100 or 200 points towards the upside. So the risk management would be terrible if you got in at these high levels. The risk reward ratio is just not there. So be patient, wait for the markets to pull back. They will pull back. I can assure you this. The markets don't just go up and up and up forever. They do have big pullbacks, and that's exactly what I'm waiting here for in the Nasdaq 100. The lowest price, the highest price that I will buy is the 50-day EMA, especially when the RSI is all the way up at 80. So if we can get that move down towards that 50-day EMA down at 15,340, I am a buyer, and then I will go and retarget back towards the all-time highs, which of course is now 16,400, give or take 10 points. But the RSI is what I'm looking at this week for it to, I want to see it back below 70, and I am anticipating a snapback here in the Nasdaq 100. Very similar over here in the S&P 500. We've sliced through that 4,600 target of mine. We're now trading up at 4,690. We did in fact hit 4,700. I made it very clear on my YouTube channel that my price target going into the end of the year is 4,800, and my highest price target is all the way up at 5,000. Historically, we are entering a very bullish time period for the year when it comes to the stock market. But look, exact same as the Nasdaq 100, RSI is trading all the way up at 76. This week, I'm looking for that pullback, perhaps down towards 4,600 or the 50-day EMA. If we could get as low as the 50-day EMA, this is an area where I would buy going into the end of the year. But the trade, it simply just isn't on at these high levels. The risk reward ratio is shocking. If you bought here, you'd be potentially aiming to get 10 points up towards 4,700, but you're risking over 200-300 points towards the downside, and that wouldn't even be a sharp fall. We could easily snap back towards a 200-day EMA. In fact, that would be incredibly healthy for this market, which is all the way down at 4,229. So it's times like this which can really hurt retail investors, especially if you're new to trading. Do not be buying up at these all-time highs. This has been very bullish lately, but when you see a pattern like this, it's not necessarily good because it is overbought. It's all about that RSI. So wait for that snapback. It will happen, I can assure you. And when it does, we will take full advantage of it, and I will let you all know when I do buy these indices. Moving over to the crude oil markets. Crude oil, again, very interesting. We broke below $80 a barrel. Now, my last video I did, which was on Wednesday, I did say I had a short-term sell position here in the crude oil markets with my take profit down at 80. Look what happened, guys. We went and hit that take profit. So our signal team managed to profit on that, that small short position. And then what happened? I then sent out a signal at $80 a barrel. As soon as we closed that short position, I then advised my signal clients to buy the crude oil markets. with a take profit up at $81.50, and we did go and hit that bang on the head. Currently trading at $81.34, but for a brief moment we did hit $81.50, and we closed that trade out in profit as well. So this is why I love the CFD markets. You can capitalize from movements towards the upside and the downside. You know, you don't just need the markets to go up, you can also short them, and that's exactly what we did. We took full advantage of the volatility that occurred in the crude oil markets last week. We sold towards the downside, we bought the dip, and we traded it back towards the upside. Very technical movement though here seen in the crude oil markets. We went down and hit that 50-day EMA nearly head on, give or take a few points, and then from there we've had the bulls come in and protect this market, and the dip has been bought. We've got that daily close back above $80 a barrel. Right now I think there's a fantastic trade here in the crude oil markets where you could trade it back towards your all-time highs. You know, very similar to what's happening over in the Nasdaq and the S&P500. We've seen that massive run up here in the crude oil. We then become overextended with the RSI trading as high as 76. And what's happened? Well, we've had that pullback. And now the RSI is trading all the way down at 53. And that's exactly what I'm anticipating over in the S&P500 and the Nasdaq100. As I just mentioned, you know, we are very overbought on both our RSIs. So I'm waiting for that pullback, just like we saw here in the crude oil markets. That then creates value, and you know, from here we could easily rally back towards the 75 to 80 level here on the RSI, and that should take us well above $90 a barrel, and that is my end of the year target here for the crude oil market. So very bullish here. I think right now offers a fantastic trade. Great risk reward ratio. You can put your stop loss just down at 76 on the crude oil markets. You know, you could just drag that up there. There we go. We found support at that 78% level. So you could just put your 50-day EMA down at $77 a barrel, which is below the 50-day EMA, and you can trade it back towards 85. That offers you a great risk reward ratio. But as I just mentioned, ultimately I do anticipate these markets to go towards $90 a barrel. Finally, moving over to the euro US dollar, we haven't really been doing much over the past couple of months. We've just been trading flat. We have popped up towards the upside. For those who've been watching my videos for some time, you know that I have two buy positions here on the euro US dollar down at 1.15. I think 800 I bought. My stop loss down at 1500. And my take profit up at 1700. I do anticipate another move towards this next fib zone here. We're trading within this dark green fib zone, but we have the 50-day EMA towards the upside. So I do anticipate a move towards the upside to go and retest that. For those who've been watching my videos for some time, you'll know that I'm extremely bullish on the euro over the US dollar for the medium to long term, with all the money that's been printed this year. Especially in the US, I think that will kill the dollar medium to longer term. And of course, we've just had that bill that's just been passed this weekend, which is worth over $1 trillion, and has now been sent to Biden to sign it into law. And of course, that means more printing of the US dollar, where the euro is kind of over that phase right now. So very, very bearish indeed for the US dollar medium to long term, and I do anticipate to see a bounce here in the market this week. So Wednesday, when I do my second video for the week, that's what that's a key area where I will be looking at. But I'm going to wrap it up there. As I mentioned at the start of the video, guys, please go and follow the social media, our social media pages, Twitter and Instagram. On Twitter, I've been posting my $1 million challenge, where I've been trying to take my $129,000 account up to $1 million, and I just hit $300,000 the other day. So go and check that out. And then on Twitter, I'm always posting charts that I've been analyzing throughout the week. So please go and give us a follow. And then, of course, in a few days' time, I will be announcing the big refurbishment of daily market movements. It's going to be a completely new business structure, and I can't wait to announce it all to you soon. So thank you very much. Give this channel a subscribe if you haven't yet done so, and I will see you all on Wednesday.